So your name is Gareth, which is pretty cool because I'm Larreth.
Yes.
And when my parents were naming me, they wanted to name me Gareth.
Okay.
But then my dad was like, no, my name is Listen. That's my dad's name.
Yeah.
I was like, no, I want my son's name to start with an L. Then I became Larreth.
Okay. So I was wondering where Larreth came from. I haven't met. You're the first Larreth I've met. So yeah, we could, Larreth and Gareth could be a podcast.
Yeah. That's so cool. So your surname, where are you from originally?
Bleazard. So it's, yeah, my aunt's done some work, on it, but it's, and my brother's had one of these, I think it was a 23andMe or one of those sort of tests. I think most of our family's actually from England, or most of the genes are from England, and my grandfather's English. But we're not 100% sure where the surname originated from. I think my aunt did some work and it was thought that it could be French or could be, and I think with these names it got changed along the way. They've changed a Blizzard into a Bleazard or something like that. Someone changed their name along the way, and so not 100% sure. But yeah, they're the only, if you ever meet a Bleazard in South Africa, they're related to me directly. They could the first cousins. So there's only a few of us here.
So you grew up in Cape Town, or born and raised in Cape Town?
No. So born in Johannesburg. Grew up between Durban and Johannesburg. Went to varsity in Grahamstown at Rhodes University.
Okay.
After varsity went back to Joburg, sort of followed, I guess the general route that people did when I was leaving varsity was it was more go to Joburg, start your career there. Probably a few years before me was more go to London for a year or two. They'd sort of changed the rules, and then these days it doesn't really matter, because I think with people working more remotely, there's lots more options. But yeah, I went to Johannesburg back there and went through the Standard Bank grad program, and then that sort of was where I kicked off my career. Yeah.
And in Standard Bank, what was your role when you got there?
So I was in the grad program and rotated a bit originally, and it was in data and finance and analytics to start. And then eventually I went into the investment banking team in the M&A corporate finance. So that's where the first sort of interest, I guess, and then directly in investing and buying and selling companies and raising capital started. There it's a different grade to the early stage stuff, and it's been a journey for me to learn the early stage stuff over the last several years. But yeah, there we were advising, worked on the Bidvest, Bidcorp delisting, unbundling. I've worked on the Lovo delisting. We worked on big mining companies buying companies. We advised a big American company looking to take out one of our major food producers. Didn't happen. You also work on deals and you realize, which also probably helps along this journey, is fundraising, acquisitions. They're tough and they take time, and you have to be prepared and you have to run it well. And even if the idea works, if macro conditions change, or if circumstances change, or the financing just doesn't always come through on the other side, things can fall apart. So it's I think that M&A advisory, you learn a bit of that grit, and it is a really good training ground from a career perspective. They work you hard. You work ridiculous hours, but you get molded. You're working for CFOs and CEOs. That's who you're advising. So of top listed companies. So you have to show up and you have to be presentable, and you have to be able to think. I think as well. I think there's the skill they valued is sort of you can listen and you can give opinions and you can actually give a view to the client and understand both sides. I think that was what was important. They valued, being able to listen and say, okay, this view, and then also be able to argue for the contrary view, because that's what it is. Sometimes you have to be able to think, well, actually look at both sides of the coin.
How difficult is it to be in investment banking? Because I hear that, I know it's not really investment banking at Wall Street, although there are elements of investment banking.
Yeah.
My brother went there for a tour, 1 week tour, and he was speaking to some of the guys on Wall Street, and apparently it's the norm to sleep 2-3 hours a day and work 20 hours a day. It's the bare minimum if you want to be promoted.
Yeah.
How is it here in South Africa? Is it the same?
Yeah, I mean, I think, in our team, we had guys that had worked at the investment banks in New York, guys that had come through some of the Ivy Leagues, and were South Africans that went there, had guys that had worked in the London, in investment banks there, that were part of our team, and so you sort of do get that environment, but South Africa is definitely not as intense as America. I think as a whole, South Africa's more chilled. Americans, like as they get 4 days of leave a year, I think they're happy. Sort of they like working, I think, all the time and always being on it. But yeah, I think it was like, you were working often when you're on deals, you would be working till 2-3 a.m. sometimes, waking up, starting again at 7 a.m. for long periods. But there was also, ups and downs, sort of, where you would have more reasonable nights, and for not too long, because then they would realize, well, like I said earlier, sort of deals would die or go quiet as well. So they wouldn't necessarily, if you want like 4 deals at all quiet, they wouldn't necessarily give you more capacity because they can always come up at any point. But if you're sitting too long or 2 or 3 days with not working too hard, they'll just throw you a pitch or a RFP to respond to it. So they keep you busy. They'll only to be quiet for too long. But like I said, I think it is a great, when I left Standard Bank and left on good terms, it was because we were going to travel for a year.
Okay.
And went to Southeast Asia and South America for, it was about 10 months together we were traveling. But when I left, I was, and especially when I came back, I wanted to, and that's when I started getting into the earlier stage stuff. Because I look at the guys ahead of me, and they were good mentors at Standard Bank and really talented people, but I didn't necessarily want to be in the bank in 10, 15 years. I mean, I wanted to try and do something slightly different. So, it's a great place to learn and cut your teeth, I think, and I would recommend to anyone, like if you just really want to learn tough, good skills, do it in your 20s at the beginning when you've got lots of energy and you are starting a career, and don't be in a rush necessarily to, you can make more money in other things. You get paid relatively well, but not, you can make more money earlier on doing other things maybe. But it is from a skills perspective, it is a good place to learn. Yeah.
Speaking of making money, if someone is 20 years old and they're listening to this and they want to make as much money as possible, what would you advise them to do?
That case, besides starting a YouTube channel, stick if you didn't banana at it. I don't think I don't know if there's, I think that's the thing. Everyone, wants to find easy, quick wins and easy money. Yeah. But other than the odd person that, really finds a unique opportunity that's really ahead of the curve, or, leverages, repeats something here that's done overseas before anyone else does, and you make, I think a lot of it is a long slog. It's sort of starting, and it's a career. It's a journey. You building it up over time. So, I think if you at the cutting edge of technology and new technologies, first adopters and Bitcoin, or when you're ahead of the curve on YouTube and you get channels, or you're really good at what you do in those aspects, you can make good money quickly. But as a career, as a starting point, you might be a little bit behind, but it's better to rather choose an option that's going to set you up for the future, and then rather worry about that because it's marginal in the first few years. It's sort of 10 years down the line that then you'll think your starting salary was has a percentage of what the potential is to earn. So you sort of need to be less worried about that at the beginning, which is hard because you never know that the steps you're taking are taking you in the right route, I guess. But yeah.
All right, so let's talk about Grape North Road.
Yeah.
What was the motivation behind starting it?
Yeah, so then, like I said, when I first got back from traveling, I had one coffee with the guy who was head of coverage at investment banking, Standard Bank. They started a new sort of area. He's now head of Barclays investment banking, and client needed help running their non-core asset disposal process. So venture listed construction engineering company, and they were selling about 10, 12 assets and having to do a debt restructure at the same time. And so straight away I said, okay, now I'm doing my own sort of consulting thing. So that sort of kicked up, and I want to get into the earlier stage. So I reached out to a whole lot of people, and one of them was Abu Qasim, who runs Josie Angels, and got involved with Josie Angels, and started really, attending every pitch, trying to go through as many processes as possible. At the same time, I also reached out to a guy at Jumpstarter and advice on companies on Jumpstarter, which is the crowdfunding site. And I found that a bit more difficult because you end up doing half your time, you end up doing due diligence on the people that want to. So why does it us? Someone must steal my money, like scam me. But so it's always a worry with crowdfunding. But it can work. The platform can work with trust. But yeah, so that sort of started doing both advisory and angel investing in early stage sort of mentoring or advice. And then evolved over the next few years. I was mainly working on contracts with corporates and doing angel investing. And when we came to Cape Town it's about 3.5 years now. I was like, okay, well, let's really make a go at trying to get into creating an entity that's in the early stage investing or in the ecosystem. And I didn't know exactly what avenue I went to. And again, that's even evolved over the last 2 years or 2 and a bit years of doing it. It's, I don't know if I should have the advisory arm, specific venture capital arm or venture studio arm. And, it's evolved. But yeah, the motivation was really, I've been trying to learn skills over several years, and it was like I think ultimately job creation and in South Africa and Africa, and creating industries and creating businesses is the only route to success. In South Africa and the continent. We have to be globally competitive, or we have to have policies that we trading intra-trade within Africa has focus on, and we trade as a block, and we do a whole lot of things. So ultimately the motivation for doing it is, I think it's the best way forward, to make a difference, to create jobs, to create businesses. We have to do it. So that was the motivation. I'd sort of had a few years of learning the skills. And then it was, well, okay, let's try and work out what this looks like from an entity perspective. And it's lots of conversations with people. It's even through the mentoring, I do found this institute. I then joined the VC lab, which is their sort of accelerator for venture capital.
That's pretty cool because I'm an alumni of Founder Institute,
Yes.
the startup program.
Yes.
So by extension, that means you own a little part of Microsoft Academy.
Oh, yep. Yeah.
Pay for your investment, your time investment, and everything. Yes.
Yeah, so and it's a great program, Founders, which I think it is. And Keshni's great. She runs it.
But she's like on the ball. She's on the day. You would swear that she's just running on like 16 cups of all times. She seems to always have so much time. I wouldn't get so much time. Yeah, like this.
Yeah, so I'm involved with her and Josie Angels as well. But yeah, she's a great person to be involved with. And exactly. Through that Founders Institute, I heard about VC Lab, and that helped me sort of mold what I wanted to do, because originally I was going to go and raise funding straight up front, trying to raise a fund. But I then evolved it to more saying, well, actually, I want to be more hands-on in the businesses, and where we landed was to let's organically get involved in businesses. Let's start growing them and creating businesses by ourselves, and then we'll get funding once we can get a bit of track record and we can grow the team. And because ultimately, if you go the venture capital route, it's also it's a long path. It's you're raising capital, and maybe as a first time manager, you're going to raise, maybe you can raise $5 million, maybe you can raise 100 million rand, maybe you can raise 50 million rand.
And do you raise it from investors all over the world?
Or you can, but I'm saying, we didn't go that route. I didn't go and raise that money straight away. But I'm saying that is a route you can go. But the with venture capital and with all these things, and I guess startups need to know, the guys need to get returns, but it's over 7 to 10 years or longer to get exits and proper returns. And you'll then maybe raise a second fund 2 or 3 years later, and you can start getting fees and paying yourself. But it is, if you want to go that route, it also of raising that fund and only are doing that, it is also a long time to sort of prove yourself and prove your model. You can, and I just had a more desire to say, okay, I want to be more hands-on. So trying to launch or running a venture studio type, and either raising, trying to raise some grant funding, and then also looking to try and do deal by deal, getting guys, investors along the way, with eventually potentially raising a fund along that invests into the studio and will take a stake once you got enough sort of investments in it. It was only end of last year, and sort of halfway through last year, where I was like, okay, this is the route I'm going. I then a good opportunity to work on the Pick and Pay and Boxer IPO, or the Boxer IPO, that sort of taking it out of Pick and Pay came up. And again, I've tried to balance advisory work with what I'm trying to do, because ultimately I think these relationships with corporates are really good, and I've tried to keep my relationship with corporates and ex-colleagues, and so because I do think a part of jumping around a little bit, but a part of what I think we need to unlock is more corporate getting involved or investing or trying to start their own businesses. So more corporate venture studios, and to scale, especially where we are with AI and the tools available. If you have a distribution platform already, I don't think it's necessary, even if if it's it's a benefit if there's synergies within your current products and things you know about. But if it's a product that there's distribution, you've got the distribution network, and you can use a few of your employees and say, listen, use a bit of vibe coding. Let's bring on 1 or 2 consultants. Let's to sort of mold product and get an MVP out. I think corporate South Africa should be doing more of that, and that's sort of the narrative I'm looking to also explore. And why I've tried to keep the relationships is because ultimately it's like, okay, let's go and chat to corporate. What are you looking at? Or are you looking at this? Can we help you? We'll bring the team together, help run the business, and with 1 or 2 of your employees, or without 1 or 2 of your employees, whatever it is, but we share the equity and we come to an agreement, and if you utilize them as a first customer, or or their suppliers, you push a product that all their suppliers have to sign on from a vendor network, and you straight away can get first customer. Try and utilize that distribution network in order to grow businesses and use their capital that they already have on their balance sheet for investment. It's as a whole, South Africa, I think we are quite a nascent industry from being early stage investing. And I think anywhere outside America is difficult.
What makes South Africa in particular very difficult?
I think our market's just not big enough. So, it's just, even if you have a good idea here, and even European companies have the same sort of issue, you don't have that consumption market and the market in the US or China that they straight away you have.
Yeah.
And so even if you have a great product here and it's unique, you really have to go to America or elsewhere throughout the world to actually get to scale. You just can't currently do it. I do think there are some opportunities in South Africa and Africa that, we have more problems in Africa and South Africa. Yeah. And my view is, if you can solve difficult problems in an innovative way, then if you can solve them here, that product should be globally scalable. So if you can find situations in Africa where you're actually, and I mean, financial fintech products and mobile money, and it's exactly a great example. And there was just a need for it because people can't, electricity and boxes in houses throughout Africa. There's a need for certain products or use cases that aren't necessarily needed elsewhere in the world, but like mobile money, which is flown here, is still applicable everywhere else. It's a great sort of product, and so I do think there are opportunities like that, but you'll be able to get to scale in Africa and then export. But a lot of it is, what makes it difficult is you've got less of a market to grow, and because of that, capital is not necessarily here. We also have less capital to invest in early stage.
Yeah.
But if you had the market, the capital would come. And I think the risk, I was sharing about it this week to someone. It's difficult with early stage investing in Africa because with normal investing in Africa, people will add a risk premium to sort of bonds or to equities investments or whatever it is, and your cost of capital is will be a lot higher than elsewhere in the world. But with early stage, it's such a risky asset class in itself. It's hard to say, is this more risky or is this less risky?
And how do you tell him that when you're, let's say a founder is pitching, or maybe you're on a coffee date and you're just, getting to know, what do you look at for you to say, okay, I'm going to invest in this early stage, knowing fully well, like what you're saying, that it's very difficult and the chances of failure are very high?
Yeah. So I've learned originally, I think a lot of the ideas you'd see would be more repeats of what's been done elsewhere in the world, and maybe it's a unique opportunity here. And originally, a lot of my decisions were made on, quite like the founder. I think they can do a good job. And it could be for various reasons. I think one of the investments I made was he has good connections through his father and others to pockets of capital. Whether it was a good decision or a bad decision, I'm not sure. But there was, one of them was literally just probably on the founder. I really liked, and this, I think he's still doing very well. Boo Boo, at Jobbox. Yeah, I really like, and it's being close to someone like that, I think. So, even if Jobbox doesn't eventually, I think we will do something good along the way. He's entrepreneurial, and he's, so like someone like that, a good opportunity. A lot of people are doing recruitment or changing. The solution is innovative in what they're doing, but I do back him as well to get it done. And I think what's the one thing I haven't seen enough of is also like very unique, like mind, like, sort of those completely different solutions. You just don't see enough of it, but it's just because it's so much more difficult here. So to get guys to take those big risks and to get a big enough check early on, for those solutions that are completely out the boxes, which then are the ones that get the 100 times return or the 1,000 rand times return for the fund, are more difficult to find here. And there's lots of aspects that go into it. It's because it's more earlier in the stage. And also, I think, people to go after those, it's a lot easier in America to phone your neighbor and say, "Oh, can I have $1 million?" And it'll take you a lot further than $1 million rand. And it's just not equivalent to, to ask someone for 20 million rand or something like. It's a lot like there's very wealthy individuals there that had been investing in venture capital and early stage for years and made really good returns, and they know that it's a proven asset class. So, it's just, there's, look at a variety of things. But, where we have sort of landed is if you can, especially where we're going with technology, I think distribution is so important. You really need to be able, whatever the plan is, who you're going to sell this to and how do you get it to scale? Can you unlock it? Because you often do see similar products and they can be innovative products. But you have to be able to get that distribution and then keep growing. I think that's the difficult part is. And and if you can create a moat around you, but there's more difficult these days if you come up with a really good idea here and someone sees it overseas, nothing stops them from raising more capital, and so you need to build it as quick as possible. I'm involved with two things now where the guy's trying to raise quite a lot of capital for manufacturing plants, and there's one is to manufacture women's products, sanitary pads, also wet wipes, and then have a app connected to it as well when some of the data gets collected directly from people sending pads in, and focus on women's health. And it has an NPC behind it, and we'll have an LLM behind the women's health app. But what I like about that situation is, it's a lot of capital to raise.
Yeah.
There is manufacturing capacity in South Africa and Africa. It's job creation on that side, and it's a lot harder to do because it is such a large. So you have to know what you're doing. He's got a very extensive engineering background behind him. He's very involved in chemistry side, and his brother is as well. He's connected to votes. He's their own connection through the, African Development Bank, CSIR, etc. But if you can get it right, if you can actually get that initial capital, and he's been working on the products and everything for a few years before this, and you then manufacture at scale, you can create a big moat around you, because it's going to take someone 4 years to get to that same point, an initial point of all the work that he's done. And then you can keep developing your products, that even when they're caught up in over 4 years, you can, you've flown 4 years further than them again. So yeah, those sort of like I do see opportunity in those sort of pockets as well. If you can do it, it's just a lot harder to do it. So you need the right person to do it, to be behind those specific situations. But in Africa, I think we need to be doing manufacturing. We need to be bringing our resources, not sending all our platinum and overseas to make catalytic converters, but doing everything here and doing the electric cars or engines here, and really creating jobs and creating innovative products around that. Look what Indonesia's done in the nickel industry, for example. They sort of had so much nickel and needed for solar panels, and they've created downstream industries around it. And that's policy.
But how much does a political landscape come into the play when I get what you're saying, but I just want to know from your perspective.
Yeah, so it's huge. I think, in this specific example in manufacturing, the government want to do it, but I think policies have probably not, firstly, there's no sort of startup investment policy anymore, or early stage, or tax benefits anymore. I mean, we had SJ12, which I think got money into the venture capital.
Is that a recent thing? Is it a change? Please just explain that more.
Sure. So the SJ12 policy was, a few of the venture capital firms these days actually started, I think, raising their capital through that mechanism. It was, you could get up to 100% of your taxable income back in a year as an individual by investing it into, so say, a R1 million tax bill. You could go and R1 million income, and you paid 400,000 rand tax or whatever. You could invest R1 million and you'd get the 400. You would reduce your tax for that year. So they did it. It ran for about several years, but it ended, I think, 2 years ago. I don't think some of the SJ12 companies were investing in property and less risky assets. So I think maybe that's, they found a way around some of the it wasn't achieving, I think, exactly what the government maybe wanted from a investment perspective, or they just needed the tax income. And so I'm not 100% sure on the exact rationale in ending it, but things like that are helpful. In England and Britain, they do have startup tax benefits. So it is, again, if you want to start, you can get tax, you don't pay tax for the year, and you rather invest it into startups. And then it's, you directly directing the fiscal revenue or whatever into the things you think are important through a mechanism like that. So yeah, I think policy is that. I think BE in itself is maybe also being prohibitive, because sometimes I think BE was a good policy, and it's sort of evened out. Well, it's created a top sort of level of really wealthy Black South Africans, and you do need to build each layer to even out this country, and for it to but it hasn't benefited the employees, and those employee fun,
Puzzle. How is it failed to benefit the masses or the employees?
a lot of those structures were, it depends on the company does well. And so some employees would have got these options that were worth something. But with our broader economy not doing, with the fact that we've grown whatever 1 to 2% over the last 10 to 15 years, there's been companies that have, we've lost our construction industry, and we've lost our manufacturing and textile, the company as a whole. So there's so many industries where those options were just underwater. And then, the company has done what it's supposed to have done for a B deal. And then they just restructure it, and then it rolls again and they start again. But unless companies are performing and the economic, the macros are there and the policies of the government are driving growth, those B options will be worth nothing. So again, it's ended up, because of the policy, it's almost been prohibitive to invest foreign direct investment into South Africa, because people don't necessarily want to give up 15 or 20% of their business investment up front. And again, these it's needed to even it out. But what's more important is just job growth in this country, first and foremost. We just need to be, our unions, I think, are too strong. And again, it's not, it might be the contrary, or not the view to say, but I think if you can get all those policies right and this job creation, if most people are working, you have more consumption, so then there's more money, then there's more tax, then there's more investment, then those jobs get better, then you have more to invest in education. So yeah, I think policy is super important. It's and you really need to get it right. But I think the government, I think Ramaphosa is doing the right things. I really do. I think he's against internal politics and having to. I think he probably spends 6 days a week fighting off internal politics, and then has a day to try and solve all our South African issues. He's always got someone at his back. So I think the people give him a hard time sometimes, but it's ANC's been pulled apart for in the Zuma years a bit. So I think he's had to rebuild and reconnect and clean out and clean up. And it's not people know startups, not a 3-year process to start a startup. It's a journey, and I think you're turning around the country, and the government it's a journey. And so, but he's making the right steps. And so, if we can start getting investment back and creating a textile industry and creating all these manufacturing things, again, all these things set the base for investment, more money coming in, and more startups, because there's more opportunities within the corporates, and okay, you can solve a distribution problem because there's more distribution and there's more, it's sort of.
So it's a real infrastructure. The basic industries need to be very much thriving, and then the startups can build on top.
Yes, if you believe so, like I said, if you're not solving a very specific African issue and you can scale across Africa and then export overseas, it very much is a lot of the things where, that market's just not there, the consumption market or the job market. Like I say, the industry's not there to support enough growth here compared to in the US. So, and that's why you have to go overseas, or have at least a plan to go overseas, unless it's a really innovative solution. And you can do well. You can, I think you can find investments that you can do well enough as an investor, and startups that are here and solve an issue here and maybe grow. But I think to make fundamental change, and for this, when this ecosystem goes from here to here, we need all those, that foundation in place. And then that's a long-term journey. But again, it's continuing, he's to get, and like I said earlier, I'm like the corporates involved, try and get them investing money and trying to unlock those pockets of capital and finding utilizing their distribution networks to grow businesses. And so I don't know, Dave.
Yeah, interesting. For those that maybe they're looking to raise money, they're founder that, they've got a product, they've got some traction, and they want to raise some money, and they're pitching to South African investors as well as international investors. What sort of differences should they take into account?
Yeah, so I think South African investors take a lot longer, and it's also a problem. It's guys who want to do a bit of due diligence even at early stage.
Why is that?
Again, I think it's, the asset class is not proven. People haven't made 10 times returned of their money over the last 7-10 years, like over the last 30 years, and investing in Silicon Valley, and their peers did it, or it's sort of, people are slightly more risk averse, or not, testing the water and putting little bits of cash, and so it's just a lot more difficult. It takes a lot longer here. I think if you pitching the US investors and you the opportunity is great and you find the right investors, you can maybe get a higher amount of capital in a quicker way. But it is more difficult. Again, you then pitching, you have to find the right guys that are investing into South Africa. With anything, if you're putting a list of potential investors together that you want to go to, you must understand where they're active and where they've done it before. It's going to be a lot easier selling to an international investor that's made 10 investments into South Africa or Southern Africa or Africa than someone that's never been here. You're then having to upskill him on why it's, or try and convince him why it's not a riskier class and it's a better opportunity. I mean, you can find those. It's just, it's will be a lot easier if you've got 20 guys that you're pitching that have done it before. And so yes, and again, I think it's size of check, it's time. So when you're pitching, I think as a whole, you just obviously, like I said, if the person doesn't know about the industry or the sector or Africa as a whole, your pitch is going to have to try and really push home why it's a unique opportunity and why Africa is the place to be. And whereas, you might change it slightly to local investors and have more, this is a global policy. I think South Africans maybe want to see people that are, how do you grow globally, or how do you, or even how do you go across Africa, or so. Yeah, you might tweak it that way. I think from presenting the numbers and presenting the business and the idea, I think generally the same. But yeah, there will be a few nuances. Yeah.
Yeah, I am totally with you there. I was trying to raise funding myself for Melsoft Academy, and I was doing the Founder Institute Funding Lab program. So one of the tasks there is to list 100 investors that invest in your type of business and in your geography. So I went to Crunchbase, I went to AngelList, I went to LinkedIn, and I was writing this list. And in that process, I was like, I just can't find 100 investors. It's just not even half. I struggled to get to that. And then once I started speaking to some of my mentors, they just said, you know what, you're already generating revenue. Maybe you should just focus on that.
Yeah.
Do you believe that most startups should just focus on revenue?
Yeah, I do. I mean, I think fundraising is, people negate how difficult and how long it can take. And it's how much of your energy both from a time perspective and from just an emotional perspective, it probably takes out of you during the process. So if you are revenue generating and if your business if you can get good enough growth from a revenue perspective by focusing on that and doubling down your energy on that, I think it is a great way forward. I guess to the point, it's also a lot easier. It's always easier to raise off more revenue, off more, at a later stage. Once the model's proven and the distribution network's proven, it's always a lot easier. So, but again, you sometimes want that, you believe in your idea and you want that initial capital to just create that moat as soon as possible and like grow. So, it is a tough one. I don't think a one size fits all answer, but if you can keep that growth at a good level and a revenue perspective without raising, go as long as you can, and have all your materials ready and everything, and keep just updating them from time to time, and every now and again think about your pitch and keep talking to people. Keep chatting to investors and sending out newsletters and updating them on your progress, and those things are important, because fundraising, people will look at it as like, well, I'm spending 6 months fundraising, now I'm phoning all the investors cold. If you've updating them along the way, you reaching out, you creating that network, they're seeing your growth, they're seeing your progress. When you do raise, so look, you've been raising for 2 years or whatever, but they've just been following you, and they know that you've done well, and they've maybe Googled you or looked you on LinkedIn and see your progress and followed you. And so even if you are going that way, I think it's important to keep touching base with these guys and saying, listen, we're not raising now, but follow our newsletter. We'll see when we do raise. You're going to present you an opportunity that's fantastic. So look out for it, sort of thing.
Interesting. That's really cool. That's really, really cool. So let's now just chat a little bit about AI. What's your take on AI? Are you bullish? Are you nervous? How you feel?
No, I'm definitely bullish. I do think it is it's going to bring a fundamental change to the workplace and how we work and how we do things. I think agentic agents are, they're in their beginning now, but they really are. It's going to take a lot of tasks can be automated through AI. And it's going to change the job landscape and change what people do. I had the debate, my brother and I had the debate the one day. And, some people view as you might work 2 days a week, or you might work, I don't know if I'm of that view, because there's always going to be people that want to, move up, if everything becomes free almost and robots do everything for us and people updating, everyone sort of stays at their income. But, it'll improve the lives at the bottom, but no one's going to ever get into the 1% or, get up higher if everyone's like that. So you're always going to have, in a capitalist society, you're always going to have people that are like, well, I can do my one job in 1 day, but I'm going to do 4 jobs a week.
Yeah.
And I think that's, again, the sort of, I think there's pockets, and like I was talking earlier about corporates, I think there's going to be people in corporates that you can maybe create a large venture partner network, and, you're bringing people into deals and you're giving them more equity, and they're doing, spending a day of their week on helping grow the startups and helping grow businesses, because I think people will become more efficient and they're going to have time, but they're not necessarily then going to spend that time on leisure. They might be working on 4 or 5 things at one time. So it might become more like that. And that's what my view. So I'm very bullish on AI. I'm trying to be as good as possible about using products. I've moved over to Notion Workspace, and they've kept above it, and they've got the AI Workspace, and using Notion Mail, it's got a few it's not perfect right now, but it is a great tool. Trying as part of what we're doing, we vibe coding using Cursor and Vercel V0 on the front end. And I mean, this is without a background, and I'm just sort of testing out from my own side to be like, how far can I take these tools? Our brother-in-law is a software engineer on the fintech side. So yeah, checking in with him in 2 weeks' time, and I'm gonna be like, tell me what I've managed to do. What have I got here? But I think what's important is people start using these tools and you use it because they aren't going to get adapted. So you rather want to understand on how you can unlock value and set yourself up for success, utilizing them, because it's going to change the way in which we do things and replace certain jobs. But again, we need a lot of power anyway. So there's lots of jobs there, and we need a lot of, minerals and rare earths and all these things that Africa has to do that. So we should be building these devices and building the solar panels and everything that's going to power these huge data centers and the chips behind it. And it's specialized technology, but again, there is a lot of or building the robots that build those things. So there is going to still be huge infrastructure and manufacturing. It's just going to be, there will be more automation, and AI will form a daily part of what you do.
Awesome. What's one last word of advice that you'd give to a founder who's watching or listening?
And I think it's a common sort of piece of advice is this: you have to just keep going. It's, even in what I've been doing the last few years, you sometimes feel like you're by yourself, you're isolated. And I think it's important to keep going, but also to utilize those, go to events. And even if it's just from a support perspective, you don't necessarily need to find an investor or just chat to people in similar scenarios and similar situation, and go and work at WeWork or Workshop 17 and go and chat to guys. And, even through that, it might unlock opportunity. Go for, there's these founders running clubs, and there's the Holocene, which is a climate investing thing. They often have walks up the mountain and networking. And, it's I always find it's not necessarily the conversation you think that's going to sort of unlock an idea or an opportunity in your head, but just randomly chatting to someone and you're like, actually, he's thought about it in a completely different way. I'll keep going and utilize those networks for support, I think.
Awesome. How can people reach you?
They can reach me probably on my email, which is gb@gnr.vc. Or just add me on LinkedIn, Gareth Bleazard, if you can spell my surname. Then, but just, if you add me on LinkedIn, I'll add you back and send a message.
Thank you so much for your time.
Pleasure meeting you.
Awesome.